Treasurer Jim Chalmers releases proposed new laws around mergers as ASIC gives its verdict on whether the ASX is clean. ANZ in strife over its operations in the bond market, and profits from the royal family, the UK royal family, soar. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Thursday, the 25th of July, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, Treasurer Jim Chalmers has released draft merger reform legislation, which he hopes will make the merger approval system, and I quote, faster, stronger, simpler, more targeted, and more transparent.
Let's hope so. Subject to making it through Parliament, the new system will commence in 2026 and aims to speed up the process for mergers that are in the national interest and give the regulator stronger powers, important to keep that in mind, to identify and scrutinise transactions that pose a risk to competition, consumers and the economy. Under the proposed rules, the stronger powers for the regulator will theoretically make it easier for the majority of mergers to be approved quickly. So the ACCC, that's the Australian Competition and Consumer Commission, can focus on the minority that give rise to competition concerns. The idea is that mergers should occur quickly and don't get caught up in paperwork. Now, the ACCC Chair, Gina Cass-Gottlieb, said the reforms are important because they address the deficiencies of current merger laws that allow too many tie-ups to escape regulatory scrutiny.
So how's that going to speed it up then, Sean?
Yeah, that's a very good question.
If this is going to allow more kind of deals to be examined more closely, that feels like it's got the potential to slow things down.
Yes, I would agree with that. The legislation will still be debated, but it is the idea of finding that fine line, allowing or giving the ACCC enough power to get involved in the takeovers, which potentially lessen competition, but then allow them to wade through some of the other ones. I mean, it's a fine line, I agree.
Yeah, but at least it's being looked at, and
Yes.
Reform in this particular case has got to be a good thing.
Yeah, I think so.
And cleaning up the system actually seems to be a bit of a theme this week, doesn't it? With the corporate regulator yesterday releasing its review of how well the share market works in Australia, really whether it's a level playing field. And generally, while things are pretty good, some attacks on the integrity of the market could have hurt mum and dad investors.
The Australian Securities and Investments Commission looked at how the market operates and whether it's clean. That's their word. Now, clean in this instance broadly means not too much price action in a stock ahead of an announcement, and obviously an announcement that is going to move the price of that stock. Some of the key findings, the ASX has less than half the amount of unusual trading ahead of M&A activities compared to its global peers. There were two bad periods, though, during COVID-19 and late last year as corporate activity increased. About 5% of trading activity is what ASIC called abnormal. Still seems like a lot to me. The cleanest sector, telcos, the least clean, real estate investment trusts. The review comes as the alleged ringleaders of one of Australia's largest pump and dump schemes were charged with market rigging and false trading. We're going to hear a lot more about that case. Yesterday, ASIC was out promoting the fact that it was taking that case on, and it was very determined to make sure that trading on the ASX is fair for all.
All right, taking a closer look at the ASX yesterday, how did local markets perform?
Well, the S&P ASX 200 closed down just a touch to 7,964 points. The banks were mixed. ANZ and Commonwealth Bank lost ground, while National Australia Bank, Westpac and Macquarie Group all rose. The big miners were flat to slightly higher. Some of the oil-reliant companies, think Woodside, Ampol, Viva Energy, Beach Energy, they lost ground on the back of a recent drop in the price of crude. Property stocks were also lower, with Goodman Group and Stockland both off 2%. Transurban was another poor performer. A couple of the healthcare groups did particularly well. ResMed was one, Cochlear, the hearing implant group, that was another. They were both up more than 1%. Plenty of trading updates around the place at the moment. Of course, next month we have the half-year earnings season kick in. Telix Pharmaceuticals fell nearly 7% after it said it was going to abandon its plans to list on the NASDAQ, and it was out raising $650 million. Pilbara Minerals share price jumped 5%. Then it fell all the way back down and ended up finishing up slightly after it recorded a 58% jump in revenue for the June quarter. Flight Centre dropped 4.5%. After it revised down its underlying profit for fiscal 24. The travel company said the change excluded $4 million in losses from the closure of its Discover Central America's destination management business. Fund manager Perpetual dropped 1% after assets under management fell $12 billion They've got about $215 billion in assets under management. And another fund manager, Platinum Capital, well, its share price rose 4% after announcing it was making changes to its Platinum International Fund.
Immediately after the show, Sean, we've got an interview coming up today with Marcus Olm, who's a partner at HLB Mann Judd and is the author of the IPO Watch Report.
Yeah, so we talked to him all about the initial public offering market in Australia, why it's so slow. We've had a few IPOs, Guzman probably being the one that got most publicity, but there's just not a lot going on in the market. We ask him why and what the prognosis is for the future. Now, of course, we want companies on the Australian market. It gives us more options and places to invest in, but it's just not happening at the moment. So we talked to Marcus all about that.
It seems like after the Guzman y Gomez listing, Sean, there was so much excitement and so much kind of enthusiasm. Everyone kind of saying, oh, look, the life is back in the IPO space. And then all of a sudden it lasted for about a week. And then it just kind of went back to normal.
Yeah, there was a conference yesterday, a Bloomberg conference actually, and one of the speakers, a guy called Guy Fowler, a person called Guy Fowler from Barrenjoey, he indicated, very well known in the markets, he indicated that there was a bit more movement going on in markets at the moment in kind of the capital raising M&A activity space. So he would know better than the rest of us, but it'll be interesting to see whether that actually eventuates.
Yeah, indeed. All right, international markets, anything happening there?
Well, oil snapped a 3-day run of losses with Brent rising back above $81 a barrel. Iron ore is back down to about $100 a barrel. That hasn't helped the Aussie dollar. It fell to just under 66 US cents. This is all about the Chinese third plenum last week, failing to deliver a stimulus to the world's second largest economy. And because Australia sells lots of iron ore to China, weak demand hurts the dollar. Gold is trading back above $2,400 an ounce, and one Bitcoin, Michael, is fetching just under $66,000 a unit.
Hey, Sean, there's plenty happening. And of course, today being Thursday, there is one of our bonus episodes coming out around midday today of Ask, Fear and Greed. And we're getting into a very interesting question today from a listener about devaluing the dollar.
Yeah, so the US dollar specifically, that's what Donald Trump, JD Vance are talking about doing in the US. The question is, how do they do it? And so we go through that and whether it's a good or bad thing, because it's interesting. The dollar is neither good nor bad, but most of us think it is. Anyway, so we put that out about midday today, Ask, Fear and Greed, and it's all about currencies and devaluing the US dollar or the Aussie dollar.
Yeah, it is a really interesting question. And of course, if you have a question that you would like us to get into, it can be about markets, it can be about the economy, it can be about business. Ask Fear and Greed. You can shoot it through at fearandgreed.com.au on the website, or head along to LinkedIn or Facebook or Instagram and send your question on through. And it can be anonymous as well, Sean.
Absolutely.
Perhaps if you've got something a little bit salacious that you want to ask us, then feel free to use a pseudonym. You can be like Big Bob or something wants to know.
Let's just take a break.
Anyway, stick around for Ask, Fear and Greed out at midday every Tuesday and Thursday. Ask, Fear and Greed. Sean, let's move on. We'll be back in a moment with the rest of the day's business news. Sean, the federal government has received about 4 times what it needs to offload a 10-year bond, with $55 billion in orders for the issue, which was expected to raise between $11 billion and $12 billion.
Bonds, Michael, sexy stuff. You'd agree?
Actually, you know what? You have convinced me of the sex appeal of bonds.
Excellent.
I don't know if it's the voice you use when you're doing it or just the subject matter itself.
I should put my shirt back on. You're right.
Yes, please.
Excellent point.
Thank God it's a podcast, not a vodcast. Please go on, Sean.
Well, given this issue is oversubscribed, there's clearly plenty of investor appetite for 10-year government bonds, especially when they're yielding 4.42%, which brings me, sort of, in a roundabout way, to ANZ. Really fascinating stuff going on there at the moment. The corporate watchdog, ASIC, is examining the big bank's role in the sale of $14 billion worth of government bonds last April. Now, there are only about 19 organisations that the government trusts to deal with these massive bond issuances, and the larger you are, the better it is. It's emerged that ANZ provided the federal government with inflated bond trading data. Essentially, my words, ANZ boosted its resume just as it was trying to win the right to be involved in some bond issuance. Also, it's being investigated by ASIC for allegedly manipulating what's known as the benchmark 10-year futures rate, which is kind of like the cost of the bond. I suppose that's the best way of putting it. So two things there that ANZ is facing. The share price was sold off. It was down about 1% yesterday. The Fin Review is covering this pretty heavily. I just think ANZ is in some hot water on this one.
Yeah, it does seem that way. Now, one retailer doing fairly well at the moment is Repco, which is US owned. The automotive parts group is growing just as major competitors are fighting off takeover attempts.
Repco is owned by New York-listed Genuine Parts Company, which reported that its Australasian automotive parts operations had generated same-store sales growth of 2.3% for the June quarter. Pretty good. Now, Repco has 490 stores in Australasia. Its main competitors are part of Bapcor. Now, Bapcor runs the Autobarn, AutoPro, Burson and Midas chains. It has 1,100 outlets selling car parts to mechanics, motoring fans, all sorts of people. Its same-store sales growth is forecast to come in at less than 1%, according to a report in the Financial Review. Bapcor officially rejected a $5.40 per share offer from Bain on July 9, saying it didn't represent fair value. It closed yesterday at $5.18, but obviously it appears that its growth isn't as strong as Repco, so that will put pressure on its share price.
This is an interesting one, Sean. The Aboriginal and Torres Strait Islander population of Australia is now over 1 million people, an increase of 6% since June 2021.
Yeah, it's actually a projection based on levels of fertility, paternity, mortality, and internal migration, and it suggests that the number will reach about 1.2 million by 2031. While Indigenous Australians are more likely to be living in the regions than non-Indigenous Australians, there is a shift towards major cities. Perth is projected to be the fastest growing Indigenous region. It's expected to grow by about 2.8% on average annually over the next 10 years. Brisbane is next, about 2.7%. Now, New South Wales is the state with most Aboriginal and Torres Strait Islanders in it. In total, the group comprise about 3.8% of Australia's population.
And along the same lines, Sean, the number of Kiwis living in Australia has hit 700,000 for the first time, thanks to a few rule changes which help New Zealand citizens gain residency here.
Yes, there were 35,000 Kiwis flowing into Australia in the 11 months to the end of May, according to the Bureau of Statistics. Before the pandemic, on average, it was about 10,000 a year. So we've gone from 10,000 to 35,000. Australia's economy, particularly the labour market, is much stronger than New Zealand's, while since January, anyone granted an independent skilled visa can immediately apply for Australian residency. Previously, they had to wait for 12 months. The other interesting fact from the ABS today, more than 5 Kiwis who head overseas travel to Australia. Now, I'd imagine it's a stopover for many of them on the way through, but still, it was 84% go via Australia or at least come to Australia.
Oh, there you go. Goodness me, you love your statistics, don't you?
I do. It's a big stats day today.
Oh, it certainly is. Turning to international news. Now, Kamala Harris has quickly emerged as a force to be reckoned with, even before officially becoming the nominee for the Democrats. And in her first rally as leading candidate for the Democrats, she said the November election will be, and I quote, a choice between freedom and chaos.
Yes. Ms. Harris raised $150 million from donors in just 3 days, and a Reuters Ipsos poll overnight suggested Harris was 2 percentage points ahead of Donald Trump, no doubt helped by the initial enthusiasm from widespread media coverage. Harris is already travelling through important working-class states like Wisconsin and Michigan and Pennsylvania. She really needs to win those states if she hopes to win the November poll.
Yeah, and it's worth going back and having a listen to your interview from yesterday with Bruce Wolpe, who, of course, knows this space so well. He worked with the Obama administration. And he really talks about the fact that now this is a contest. There's actually a chance now for the Democrats. And it's really going to be a competition now between Trump and Harris over the next, 3.5 months.
Yeah, I mean, Trump is still favourite. I think that's important to point that out. Lots of enthusiasm about Kamala Harris at the moment. But the next, what Bruce says is the next few weeks will tell an interesting tale.
Yeah, indeed. Definitely worth a listen, though, to that chat from yesterday. Elon Musk, Sean, has asked Tesla shareholders to be patient, which I'm sure they all want to hear, after the EV manufacturer reported its 4th straight disappointing quarterly result.
Yes, Elon Musk asking for patience. Ironic, isn't it? Somewhat. Don't think he's known for it.
Do you reckon Elon Musk has ever shown patience himself?
No. For the June quarter, Tesla's profits were disappointing. Their sales were higher. The margin it makes on cars narrowed, and in after-hours trading, its share price tumbled 8%. Mr. Musk told investors that Tesla won't unveil the highly anticipated robo-taxi until October, and it will only be a prototype. A new lower-cost car won't go into production until the first half of next year at the earliest. A planned factory in Mexico is on pause, and a humanoid robot that Musk claims will send Tesla's valuation soaring won't be ready anytime soon. Lots of bad news. Also hurting Tesla is emissions credit sales. Now, I must say, I didn't realise this. Tesla sells credits to other car makers seeking to comply with emissions mandates, and only half as many of those were sold in the June quarter. So it just didn't get the cash for those emissions credit. I think they're kind of an interesting concept.
Yeah, I was not aware that even took place.
No. So presumably car manufacturers must be limited in terms of the emissions they can push out. Obviously, Tesla being an EV doesn't emit, so it's got these surplus of them, and it sells them to other car manufacturers.
Additional revenue stream. I've learned something. I mean, I learned things earlier in the podcast
Obviously,
as well.
Yeah.
But I've learned something just then as well. I've learned something with this next one, Sean. Yeah. This is an incredible story. Profits from the Crown Estate, and we're talking the Windsors in the UK, jumped to about £1.1 billion last year, or nearly 2 billion Aussie dollars, on the back of some pretty smart deals involving the leasing of seabed sites to offshore wind producers.
The Crown Estate annual report says that earnings last year more than doubled, and as a result, the money the royal family receives from the government, aka the sovereign grant, will rise from £86 million to £132 million. Now, net profit from the Crown Estate is passed back to the government in return for a fixed yearly payment. King Charles III, he has for a while been pushing for the sovereign grant to be lowered, and this year it's only 12% of profits. It was 25% of profits. So you can imagine it's getting £132 million. If it was the old rules, which Charles changed, they'd be getting more like £260, £270 million. And that might actually cause a PR disaster, I dare say. Some other interesting facts from the annual report, according to the New York Times: the number of visitors to Buckingham Palace and Windsor Castle returned to almost pre-COVID levels. Family members took part in 2,300 engagements in Britain and abroad last year. Now, 2,300. Now, when Queen Elizabeth II, the year before, Queen Elizabeth II was alive, obviously, she and her family managed 3,200 official engagements. But over the past 12 months, keep in mind that Charles and Princess Kate of Wales, I think it's Princess Catherine of Wales, I should say that, Michael, have had illnesses. They're the two of the main people that actually attend many of these engagements. So it was 2,300 engagements. The number of messages the King and the Princess received by mail wishing them well following their health announcements was 27,620. And Buckingham Palace is also making progress on its goal to recruit a more diverse workforce. The palace said 11.4% of its employees were from ethnic minorities, though that is still well short of its, I dare say, conservative objective of 14% by next year.
Yes, that is still quite conservative, isn't it? Sean, that number, 2,300 engagements, I know that the 3,200 is obviously more, but even just looking at that 2,300 engagements in the last year, that's an average of 6.3 engagements per day. And I know that there's like quite a sizable family there. But still.
Yeah, it's huge, isn't it?
It's a lot of engagement. Like, if I have one engagement a week, that's too much for me.
You would never do as a royal, though. You wouldn't want to show your head.
No, that's fine. I just do all of my engagements via Zoom. I am staggered by that.
Yeah.
Oh, gosh, what a day it's been today, Sean. I've learnt so much from you.
So much going on.
Now, up next is the Fear and Greed Daily Interview. Marcus Ohm, partner at HLB Mann Judd and the author of the IPO Watch Report, is your guest.
Yes, talking about the IPO market, the initial public offering market, what's happening there and why it's so slow in Australia.
It is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And don't forget, at midday, there is the bonus episode, Ask Fear and Greed, just 3 or 4 or 5 minutes. of us answering listener questions. And if you've got your own question, make sure you send it through. And Sean, I forgot to mention this yesterday. Yesterday was Wednesday, which means there's a new episode of our sister podcast, How Do They Afford That?
What was that one about, Michael?
Well, Sean, thanks for asking. It was actually part 2 of an episode that we started last week, and I didn't mention it last week because I wasn't here. But we are joined in the studio. Obviously, I am joined every week by Canna Campbell, financial planner and founder of Sugar Mama TV. She's a financial planner who really kind of specializes in personal finance. We get into her personal finances in her relationship. Her partner, Tom, actually joins us, and it's really quite voyeuristic. It's a little bit salacious. It's all this kind of stuff. But it is great to listen to. I was sitting there in the studio going, I'm asking questions. I don't really know whether I should be allowed to ask these things. I was asking about kind of prenuptial agreements, all these kinds of things. Great fun for me.
Wow. And they were happy to answer it?
They answered everything I put to them. They were both fantastic with it. So it is just an insight into how money works in a relationship when one person has a great deal of knowledge about money. And so I just thought it was a fascinating kind of and very good of them to be so open about it. Anyway, I'll put a link to the episode in today's show notes, and you can find How Do They Afford That wherever you listen to podcasts as well. Thank you, Sean.
Thank you, Michael.
It is Thursday, the 25th of June, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.